This is for the first time a chairperson of SBI would be ringing the gong after listing.
Okay, great.
So this indeed is an historic day.
Absolutely, absolutely.
So what's your first memory of Bombay Stock Exchange?
First memory would be not as chairman and not very far back also. In fact, I have not seen this hall the way it was before, we had the electronic exchange. So to that extent, it's not a very old memory.
This is one of those places where I think history has been made and history will be made again and again. This building has seen many booms and many busts. And what I really like about our exchange setup is that it's sophisticated, it is modern, it is advanced, and it's one of the best ones now. So I think it's history in making, folks. Like I said, India's #1 channel, India's #1 banker, and India's oldest exchange. All of them have come together, and there you go. Thank you for finding time. This really means a lot to us from Team ET Now. Thank you for ringing the gong. The first question to any banker head of credit policy is, will he cut rates? Do you think he needs to cut rates? And the kind of commentary which we got from Governor last time was largely concentrated around concerns around monsoon, commodity prices, and Greece and other problems. Thankfully, those problems have got sorted.
That's right, but whether he will cut rates immediately, I am not too sure about it. However, whether rates need to come down, yes, they need to. What is it that is preventing, not only the cutting of rates, but also from transmission? I think 2 or 3 things. One, of course, is for the banks, from the bank side, because we are so dependent on deposits. If you take our bank, 97% of our resources are deposits. And on the deposit side, we find it very difficult to lower rates because basically the small savings rates of the government continues to be pretty high. Also, as you know, in India, there is no social security net. So a lot of the citizens, especially the senior citizens, they depend on bank interest in order to, supplement their living standards. Now there again, if you bring it down too sharply and too soon, there is a hit over there, which obviously is something that you would like to avoid. The second thing that where we are finding, transmission is difficult. Normally when rates go down, you are able to book treasury profits. Yes. This time, however, we are finding that the GSEC yields are not really easy. In fact, they have hardened. Now when that happens, then treasury profits are flat. And you are not able to have that leeway that whatever you're losing on the side of the rate cuts, that is on the side of the interest income, that you're able to make up in treasury profits. And therefore, there is this issue as to why the banks are not able to bring it down, bring the borrower rates down faster. Also, you have to understand, that the provisioning requirements have really and truly gone up in every which way because the NPAs had happened and that NPA book is maturing. And as it matures, obviously it will need more and more provisioning as per the current regulatory requirements, and the regulatory requirements themselves have become tougher. So I think these are the 3 things. But I still believe that going forward we will be into a easing cycle. It's a question of a little more patience.
So do you think a rate cut is a sufficient condition but not a necessary condition for economic revival?
Yes, I do think so, because at the end of the day, the component of interest rates or interest costs to an entire project is not more than 1.5%. So that being the case, it is not something that is absolutely mandatory. What a rate cut does is, I think, more, on the side of the sentiment. It brings up a very positive sentiment. It is, of course, very material to the small sector, that is the small and medium sector, where the margins are already very thin. There, a rate cut really does make a difference, in their profitability. But I think for the larger projects, this is not one of the major things. It is not a precondition. It is not a showstopper.
Commodity prices have come down. In fact, steel prices and other metal prices have melted away. Is that bad news for a banker? Because small metal companies, they will struggle now, and working capital requirements will come down, which will have impact on credit growth.
And that's very true, and that is what we are seeing. Earlier, we used to always say that, GDP plus inflation plus a little bit, that's what we will grow. Today, if you look at the WPI, it's negative. So therefore, GDP plus inflation doesn't happen. There is no inflation as far as WPI is concerned, and which is what determines the working capital requirement of the manufacturing units. So definitely, that is one of the reasons why credit growth is not showing up. But I think, you know, if you look at commodity prices, it has its pros and it has its cons. Obviously, the people who are playing in commodities, for them it can be bad news. If they're already working on wafer thin margins, then the margins melt away because they have to meet those prices. But in respect of those who use commodities, it's actually very good news. And I think overall from the India perspective, it's good news because we are a consuming nation.
Yes.
We are a nation that needs to grow. Therefore, for us, if the basic commodities are coming at a cheaper cost, then for us at least the growth will come at lower prices. Therefore, for a nation, I think it's good news.
Now, infrastructure was the problem area, has been the problem area, I reckon would remain the problem area. But for this financial year, can metals, can commodity sectors, can commodity companies be the problem area, especially steel sector?
I think steel sector is already facing a lot of margin pressures on account of the fact that there is a lot of dumping from certain nations. And we are all aware of the problem. I think the government is also seized of the problem and we have been asking them to do something about it. We have seen some amount of anti-dumping duties come in at 2.5%, but really speaking, I do not think that is sufficient, and definitely I think they are also seized of the fact. What has to happen now is basically the steel companies have to work towards creating better efficiencies. You know, in any sector, there are good companies and there are not so good companies. So the good companies will come out stronger from all of this. The not so good companies, there is a question mark whether they'll be able to survive or not. We have to wait and see. But I think overall this will make the sector competitive as far as, you know, international pricing is concerned. I think, you know, there is a very great strength in India. Time and again we have seen that when we have been under threat, we have always been able to turn that threat into a challenge and come out better from it. In fact, when the economy opened up, initially there was a thought that all of the Indian companies would go under. Nothing of that sort has happened. In fact, similar thought was there even for the public sector banks, that, you know, the private sector would totally take them over. That also has not happened. So I think, you know, we have basic intrinsic strengths. We need to be able to play to those strengths.
So just to clear the air, you don't expect a big write-off in FY16 in the commodity sector or the metal sector?
See, write-offs will continue to happen in respect of the NPAs that have been created. Okay. This is a natural process. It is a process where we cleanse our balance sheets, so there will be write-offs. Now, whether it will come mainly from the steel sector, I don't really think so. It is one of the sectors that is impacted, but I don't think it will be the main sector. There are other sectors also that are impacted. So whatever write-off happens, it will be broadly secular, you know, it will be across the board. Whatever stressed assets we already have, we'll be looking at those to write them off. But remember one thing, when the banks write off, it does not mean that the recovery efforts stop. The recovery efforts continue full tilt till such time we come to a complete resolution. So much of the write-off that you're seeing in the books is basically only technical write-off. The requirements for following that up is in fact much more stringent than even live accounts in our books.
So numbers look ballooned up, that's not the real story.
Yes, that's not the real story.
But the turning point for a banker would come when bad loans they become good loans.
That is right. That is right, and in fact that is when, you know, you will begin to see much better bottom lines, because much of the provisions that we have done, they will start getting written back into the bank's books.
So how far are you away from this?
That I think is still at least 12 to 18 months away. Okay, because again, people keep asking what is the turning point. There is no particular point. I would think that, you know, there is a point if there is something like a V recovery, and this is not a V-shaped recovery, it's like a flat U-shaped recovery. So recoveries will happen slowly over a period of time, and then it will sort of creep up on us. It is already creeping up on us as far as I am concerned. And you will see that recovery going up, but because it is a kind of a flattish recovery, it's a slow recovery. Therefore, you know, for those sort of things to happen, that the balance sheet itself turns, where the provisions start getting written back, I think it's still 12 to 18 months away.
Now, government has increased their total allocation for recapitalization. Would you be getting more from that pie now? I know the earlier number of about 2,900 crore, but now that number has gone up. Will SBI's share also go up?
Actually, SBI may actually approach the markets, which is where I hope that the gong ringing today portends good things for us. I think the idea is more that companies that can approach the market should approach it. and companies that may not be getting that kind of space from the market, that the government will support till they are able to turn their game around and become strong enough to approach markets. So if that is the thinking, then I think, we are not looking at very great sums from the government.
What is your guidance for NPA for this year?
See, guidance is something that I cannot give because we are just closing our
for the year,
first quarter books. For the year, I think we should be able to hold and maybe able to bring it down. Internally, our targets are to be able to bring it down, and I fully hope that I will be able to do so.
I know we've extended our appointment with you, so one final question. The disappointing number which you declared with your Q4 numbers was the total provisioning number, which went up. I understand there were year-end compulsions and the new guidelines, but can provisioning come down? Can I safely assume that what you reported with Q4 numbers, that may not repeat itself in coming quarters?
Actually, the provisioning numbers for the Q4 were not too bad. What was the problem in the Q4 was the restructuring number. And there actually we explained, and I think I have been saying this constantly, that the restructuring was more as a kind of a preventive measure than an actual requirement, and that preventive measure came in because the window from RBI where they allowed the restructured accounts to be declared as standard, that window closed. And there were many people, who do not want to have an NPA to their name. So there were many approaches from us, from some of the large corporates as well as from very many small corporates. Mind you, the corporates also, they also get hurt if they have become NPA once, and even then if they recover, it's not something that they like to have on their books. Therefore, there was a lot of approaches from people who were experiencing stress, who were still not sure when the economy would turn enough for them to have good operations, and who wanted to preempt becoming an NPA sometime down the line.
Restructuring trajectory, higher or lower?
Exactly. The restructuring trajectory now, it doesn't make a difference, because in any case it's an NPA accretion only. And if NPA accretion is down, then you will know that the restructuring
You're sounding bullish, and I hope that is a broader message for your shareholders, for the market. And coming from India's biggest banker, that's the most powerful message.
I think it is right that we are seeing lesser stress, and going forward that the economy will recover.
So it's green shoots, it's not yellow weeds.
That's right.
Really appreciate your time, and thank you for joining us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.